Think crushing interest is inevitable in an economic crisis? Think again. Interest-free finance could be your lifeline. I'm a financial strategist who has analyzed how businesses survive downturns, and I've learned what works from research and real cases. For example, Harvard Business School experts have warned that businesses often need interest-free loans and cash cushions to weather a crisis. Global analysts even found that banks avoiding interest fared better during the 2008 crash. You're in good hands here. I'm citing top studies and proven history. In the next few minutes, you'll learn 4 actionable steps to ditch debt and navigate any downturn, all without paying a cent of interest. Your one-line takeaway: you can thrive in any crisis with a smart, ethical plan, no interest required. Step 1. Tidy up your finances. When a crisis hits, start by cutting expenses and eliminating interest-bearing debt first. Track every dollar. Make a simple budget with your income and all outflows. What can I trim? Maybe Mike in Seattle paused his rideshare commute, paid off a high-interest card early, and locked in a low-fee debit plan. He treated that card balance like a priority, paying more than the minimum to kill interest costs. This lean approach is critical. For example, a McKinsey report noted many small firms are shocked by cash flow gaps in recessions. So keeping your expenses minimal is key. Halal alternative. If you're carrying any interest-charging balance, consider consolidating into a zero-interest credit union loan or an interest-free community credit line. Some local co-ops or mutual banks offer these. Switch from credit cards to a debit or prepaid card. The quick playbook: track spending, pay the highest rate debt first, and pause all non-essential subscriptions or luxury buys. Example: Sarah in London sold off a fancy gadget and used the proceeds to eliminate her credit card balance, freeing her from future interest. Have you ever cut back expenses drastically in a pinch? Share one cut you'd make. Comment below. But wait, the real game changer comes next. You'll see how cities and communities offered interest-free aid that kept entrepreneurs afloat. Step 2. Tap into interest-free funding. In a crisis, banks tighten up, but some programs spring up with zero-interest help. For instance, New York City ran a program giving small businesses up to $50,000 in zero-interest loans to help cover rent and payroll. Florida offered $50 million in short-term, interest-free bridge loans to companies hurt by COVID-19. In Canada, the federal CBA program gave small businesses up to $40,000 interest-free. These aren't Sharia-only schemes, they're public programs and philanthropies stepping in. As one Harvard report noted, the most vulnerable businesses will need interest-free loans and other cash buffers. Look for similar funds, local grants, community development programs, or even religious charities, free loan societies, etc., that offer no-interest business loans. Halal alternative. If government aid isn't available, get creative. Crowdfund your idea, you sell a product up front instead of borrowing, or join an equity crowdfunding platform. Investors fund your startup in exchange for profit share, not interest. Many credit unions and cooperatives also make interest-free loans to members. Quick playbook. Research emergency relief programs in your region, city/county websites. Talk to your bank about interest-free hardship plans and consider a crowdfunding campaign. Would you prefer an interest-free loan with a 10% profit share or a small high-interest bank loan? Type YES for profit share or BANK for the loan or your own choice in the comments. Coming up, the timeless trick that helped an entire ancient community get out of debt. Step 3. Form profit-sharing partnerships. Instead of borrowing, collaborate. Bring in a partner or investors who share risk and profits with you. Imagine you want to launch a small shop but have no cash. You team up with a designer, a marketer, or an investor who provides capital. You split the profits fairly instead of paying fixed interest. This is how the great markets worked even in old times. Partners pooled resources. For example, early Muslim traders used partnership models, One partner put up the caravan and another managed the trade, then they split the profits. You get full help growing and no one is charging extra interest. Search out a business partner or angel investor who accepts equity, partial ownership, instead of a debt. Offer them a percentage of revenue or profit. Peer-to-peer platforms and startup incubators often match entrepreneurs with such backers. Think outside the bank. Barter your skills for capital, e.g. you design a website for a developer in exchange for a share of their project's revenue. Quick playbook. List what you bring, skills, sweat equity, and what you need, is money, expertise. Then approach local entrepreneur networks or online startup forums. Would you share ownership of your business to avoid interest debt? Why or why not? Let us know in the comments. Up next, one final strategy that even propels your money to work ethically during a downturn. Step 4. Save and invest ethically. Build a cushion. Don't just stash cash under a mattress, but grow it without riba. For example, consider asset-based saving. Buy equipment, inventory, or even land with business partners. Any profits you generate will be halal because it comes from trade. If you have extra savings, put them in tangible value. Some families invest in rental real estate with partners and share the rental income instead of interest. Even community saving groups, like rotating credit circles, let you borrow interest-free from pooled contributions. And remember, small acts of charity can cycle back as goodwill. An old Islamic saying goes, loan to the needy and hope for Allah's multiplication of it. 2245. Halal alternative. Look into sukuk or halal investment funds which invest in real assets or business ventures. Or join a friendly savings club. Neighbors contribute monthly and each gets a lump sum in turn. Even keeping money in a no-interest savings account at a mutual credit union can earn you dividends. Quick playbook. Keep 10 to 20% of revenue off limits, your emergency fund, and move it into safe assets, gold, property, or inventory for resale. Avoid any conventional fixed interest bonds. Instead, if you invest in bonds, pick ones that are asset-backed or part of an ethical fund. This way, your money can still grow without violating the no-interest rule. Which idea will you try first? Cutting costs, finding an interest-free loan, or partnering up? Comment your choice. In summary, to navigate any economic crisis, first balance your budget and cut interest payments. Second, seek out zero-interest funding. Third, share risk via partnerships. And finally, save/invest in real assets ethically. These steps let you grow without debt. Remember, it worked for Prophet Muhammad's companions. Abd al-Rahman ibn Auf famously loaned large sums interest-free to neighbors. If you found this helpful, subscribe for more smart finance tips and share this video to help others avoid the debt trap. What should we cover next? Next time, we'll explore how everyday luxury purchases can be made ethical and interest-free. Stay tuned. Thanks for watching, and here's to your debt-free success.